Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello my dear students, welcome back to First Commerce Accountancy online classes. Dear students, in last classes we are discussed about the topic of accounting vouchers, how we can prepare that accounting vouchers, and we saw some of the specimen of some accounting vouchers like debit voucher, credit voucher, journal voucher and all. So in this class, move to the next topic, that is what? Accounting equation. Accounting equation. See, we study one concept and I told that is a very important concept. What is that concept? Yes, of course, that is what? Dual aspect concept. According to the dual aspect concept, each and every transaction involves two different means each and every transaction affects two different accounts. That means each and every transaction involves twofold effect. One is take aspect, another one is give aspect. That we know and we discussed many times about this topic. So here accounting equation signifies that the assets of a business are always equal to the liabilities and capital of the business, means are always equal to the firm's liability and capital. Capital is also called as what? Owner's equity. So according to the accounting equation signifies that the asset of a business, accounting equation signifies that the assets of the business are always equal to the liabilities and capital. Capital is also called as owner's equity of the business. So firm's business, means business assets are always equal to that business liabilities and capital. Now we know the meaning of liabilities and capital and we discussed about these topics many times. So accounting equation means what? It signifies assets of a firm equal to the liabilities and capital of the business. The accounting equation is this accounting equation represented as, see, assets equal to liabilities plus capital, where assets means A means assets, L means liabilities and C for capital. A equal to L plus C. This is a very important equation, and based on this important equation we need to do some problematic part, means we need to do some practical work and all based on this equation. So accounting assets equal to liabilities plus capital. Assets A, L for liability, C for capital. So here, and this accounting equation also can be some other derivatives of this accounting equations are other two derivatives, that is A minus L equal to C and A minus C equal to L. These two are the two derivatives of the same equation. The same equation can be also be presented in this format: A assets minus liability equal to firm's capital, assets minus capital equal to firm's liability. That is what the two derivatives of this particular equation. So, assets minus liability equal to capital, assets minus capital equal to liability. So, here the accounting equation, mainly this accounting equation depicts the fundamental components of the balance sheet, depicts the fundamental relationship between the components of balance sheet. This accounting equation depicts the fundamental relationship between the components of what? Balance sheet. Components of balance sheet. Balance sheet of the business. So, this accounting equation also be termed as a balance sheet equation. It is also be termed as what? Balance sheet equation. Because this accounting equation depicts the fundamental components of what? The relationship between the fundamental components of balance sheet. That's why it is also called as balance sheet equation. So, okay, actually we heard the word balance sheet from beginning class of accounting onwards, but balance sheet means what? Balance sheet is a total. It is a statement of total assets and total of liabilities of the business concern. So, it is a statement of total liabilities, capital and assets. So, the proprietors, actually the proprietors and the outsiders are the are the provider of resource to the business organization. From whom we can collect the business fund? From the proprietors, that is from the owners, and even from the outsiders. That is what the outsiders claims. From them we can collect the funds to run the business activities. So, the claim of the proprietor is known as, I will write here, is known as capital, and the claims of the outsiders is known as liabilities. See, in a balance sheet, both these liabilities and assets are recorded in the books of account, means in the books of balance sheet itself. So, let us see the format of balance sheet, how we can prepare the balance sheet. There is a set of format is there to prepare the balance sheet. This balance sheet comes under the financial statement of an organization itself. Financial statement includes three main components. One is trading account, profit and loss account, and the third important is balance sheet. Based on all the previous accounts, we can prepare the balance sheet. So, let us see the format of balance sheet here. Equal division to record assets and liabilities. It is not at all called as debit side and credit side. We should think that liability, we should mention balance sheet as liability side and asset side. So, here balance sheet as on. Maybe 31st March, at every end of the year we can prepare balance sheet. So, maybe 31st March 2018-19 like that. So, here liabilities, here we should record all the liabilities including capital. This column amount, that is, we should mention rupees, amount in rupees. Here we should write, means we should record all the assets in this column amount in rupees. Amount in rupees. So this is the format of balance sheet. So balance sheet as on this side, our left hand side liabilities, our right hand side is assets. So liabilities, all liabilities we should record here, all assets we should record here, means the list of assets, the total of assets are recorded under assets column, that is the business owns, means business owns, business properties are recorded here, and all the list of liabilities includes owner's fund, means owner's equity and outsiders claims are recorded here. That means the business, the entities has to owe to some other, that is all list of liabilities are recorded here. Say for example, Manasa started a business organization. Manasa started a business organization. When starting the business organization, she invested rupees 5 lakh in the form of cash. Rupees 5 lakh in the form of cash. Say for example, business started with the cash. With the cash rupees 5 lakh. This is a business transaction and it includes two different accounts. One is cash, another one is capital. When the owner starting his organization by introducing some amount or goods, that is called as capital. So this business started with the cash transaction, involves capital and cash. Involves cash and capital. So cash considered as asset for the organization. Cash, bank, furniture, land, building, motor vehicles and other machineries, tools and equipment, these all comes under assets. Assets of the business organization. Those all those are the resource. ಎಲ್ಲ ಸಂಪತ್ತುಗಳನ್ನು ಎಲ್ಲ ರಿಸೋರ್ಸ್ಗಳನ್ನು ನಾವು ಅಸೆಟ್ಸ್ ಅಂತ ಹೇಳಿ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೇವೆ. ಸೊ ಅಸೆಟ್ಸ್ ಅಂತ ಹೇಳಿದ್ರೆ ಏನು? ಎಕನಾಮಿಕ್ ರಿಸೋರ್ಸಸ್ ಆಫ್ ಅನ್ ಆರ್ಗನೈಸೇಷನ್. ಸೊ ಆಲ್ ಎಕನಾಮಿಕ್ ರಿಸೋರ್ಸಸ್ಗಳು ಎಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡಬೇಕು ನಾವು? ಫರ್ಮಿನ ಅಸೆಟ್ ಸೈಡ್, ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟಿನ ಅಸೆಟ್ ಸೈಡಲ್ಲಿ. ಅದೇ ಥರ ನಮಗೆ ಬರುವಂತಹ ಲಯಬಿಲಿಟೀಸ್ಗಳು, ಕ್ಯಾಪಿಟಲ್ ಅನ್ನು ಕೂಡ ಲಯಬಿಲಿಟಿ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೇವೆ. ವೈ ವಿ ಪೀಪಲ್ ಆರ್ ಕನ್ಸಿಡರ್ ಕ್ಯಾಪಿಟಲ್ ಆಸ್ ಲಯಬಿಲಿಟಿ? We know the concept of, the first concept of business entity concept, separate entity concept. According to that, business is separate from its owner. Business is distinct entity from its owner. Correct, right? So, based on that concept, even the owner introducing capital, that is considered as liabilities to the business organization. Liability for the business organization. Business always at the time of recording the transaction, we should think in the point of view of business, not from the viewpoint of owner. So that's why contribution or the capital contributed by the owner, that is also considered as a liability for the organization. So liabilities are recorded here and cash is recorded here. So we can record this transaction, and according to the accounting equation, firm's liabilities must equal to the firm's assets. So here actually only one transaction we have, that is what business started with cash, rupees 5 lakh. So when business started with cash, that is called as capital. So immediately we should write here capital, that is 5 lakh. 5 lakh, and another asset we have, that is what? Cash. How much? Same, 5 lakh. So now 5 lakh assets equal to 5 lakh of liability. Understood? See, capital of the firm equal to assets of the firm, means liabilities are equal to assets of the firm. So the balance sheet shows that the total, actually the balance sheet shows the total of assets and total of liabilities of the business concern. So this is about the equation means how we can represent the equation in the form of balance sheet. So assets always equal to the liabilities of the business. Liabilities this side, assets in this side. Let's move to the next topic, that is using of debit and credit. Using of debit and credit. According to the double entry system, each account means each transaction affects two different accounts. One is debit account, another one is credit account. Means debit aspect and credit aspect. Means according to the dual aspect concept, each and every transaction affects two different accounts. Means each and every account, each and every transaction affects twofold, includes twofold effect. One is debit, means take aspect, another one is give aspect, and it is also called as debit aspect, another one is credit aspect. When recording the transaction, when recording the each transaction, the total amount of debit must be matched, means must be equal to the total amount of credit. Say for example, 50,000 is debited to account and same amount should be credited to another account. Means the total amount of debited should be equal, must be equal to the total amount of credited. So in accounting terms, debit and credit. Debit and credit indicate the record, means indicate whether it is the transactions are recorded in the left side and the right side of the account. Say for example, see the account of maybe the ledger account looks like the letter T. Looks like the letter T. This letter T includes, means two sides. One is left side, another one is right side. So the ledger account or the account to record the transaction looks like the letter T. See the T format has what? I told that left side and right hand side. Left side, right side. We can say that left hand side and right hand side. So in a T account, left side is called as debit. Left side is called as debit and the right side is called as what? Credit. Let's see. Like this. This is a T format. Okay. Here in this account, left side is called as debit and right side is called as credit, and the word debit is always represented, means abbreviated as debit, DR, not DR, it is DR, and here credit, DR and CR. It is a left side or left hand side, and it is right side. Showing the specimen of what? T format. So according to this T format, left hand side we should record all the debit, right hand side we should record all the credit, and the word debit is abbreviated as DR and the word credit is abbreviated as CR. It is very important topic, important concept to record the transaction in the books of account. So here letter T, according to this account includes two sides. One is left side, another one is right side. Right side we should record all the credit, debits, left side we should record all the debits. Understood? So this is what T format. Debit is abbreviated as DR, credit is abbreviated as CR. That is what using of debit and credit. So here, so using of debit and credit, we should know some knowledge about these usages, how we can use this debit and credit to pass the journal entries. Thank you for watching this video.
Don't forget to like our video and subscribe our YouTube channel for all the updates.